Okay, so just some background on the loan program itself. Why would you choose FSA over something that the bank has to offer? The biggest thing is that our interest rates are lower than what banks have. They're generally half or a fraction of what a bank has to offer. We do have some real estate loans that are as low as 1.5%, and those are also fixed interest rates. So once your loan is approved, that's it. So it's fixed for the life of the loan. FSA wants to be your lender of first opportunity. So we are here to bridge that gap where, the bank is maybe not quite comfortable making a loan that they find a little more risky. FSA is here to support those farmers and growers that are just starting out, or maybe they've kind of hit a bump in the road financially, or they're wanting to make a big change in their operation. Another perk about our loan programs is that you can use those in conjunction with grants and other cost share programs. And so NRCS has programs such as EQIP, which Sarah will talk about later, but we can definitely do loans to help bridge the cost of that. We can also use the loans if you're required to do a matching with a grant. So that's just one of the flexibilities that we can use the program for. And the type of loan would kind of depend on what the grant is necessarily funding. So we would want to look at what kind of security and collateral we would have to match up for the loan. I want to focus on microloans more than the other loan types. These are going to be our smaller loans that go up to $50,000. With the operating loans, we can use those to purchase items like equipment, do minor improvements to real estate, and help pay for those recurring operating costs. So that would be things like seed, fertilizer, even labor. We can help with the cost of that. The term typically goes up to 7 years. Again, just depends on what we're loaning for. And the current interest rate is 4.75%. We do have a micro farm ownership loan program. Again, that's up to $50,000. That would be used for, potentially use that for a down payment if you're purchasing real estate. Could also use it just to make a full purchase on real estate, but typically it's going to be more than that on your purchase price. We can do some capital improvements and then also use that for loan closing costs. The term is a little bit shorter on that than our other farm ownership loan program. We can only go up to 25 years on that. It is generally secured by real estate. And the current rate on that is 5.125%. And then we also have farm ownership loans under the direct program. I'm going to focus on this one over here on the left. We can go up to $600,000. There is no down payment required, and this is used to purchase farm real estate, do capital improvements to the property, and include loan closing costs. We can go up to 40 years on that loan, and the interest rate is currently 5.125%. So those are programs, we can definitely use those if you live in a city, if you live on the outskirts of town or more in a rural area. We can use those programs as long as the property you're purchasing, you're intending to farm on that property and produce agriculture products. A common question that we get is, can it have a house on it or some kind of structure? Yes. Short answer is yes, the property can have a house on it or structure. We can also help put up buildings. So if you're looking at putting up maybe like a controlled environment growing facility, we can help finance that. We can also do greenhouses or hoop houses. Which is another great way to use the program. Let's say if you don't have the opportunity to use programs like EQIP or a grant that could pay for a high tunnel, things like that, we can use the loan program to finance those. Main difference, of course, with a grant versus a loan is loans have to be repaid, whereas a grant does not. So another thing about the direct farm ownership loans, as far as our eligibility, you do have to have a sales contract on the piece of real estate that you're intending to purchase. So that can be a little bit difficult. I would say if you're in a situation where you're working with a realtor, have have FSA reach out to that realtor and just kind of let them know that you're in the application process, and see what you can do going forward with the application from that point. You do have to have 3 years of farm management experience. That's only for the farm ownership loans to purchase real estate. We do have several substitutions that we can use for similar experience. So that's kind of taken on a case by case basis. So let's say you have experience working on a farm, or maybe you got a degree in ag, or you've done some courses through the extension. Those would all be things that we can use to substitute for the similar experience. So I would just talk to your loan official, whoever you have at FSA, about that requirement. Some tips for success. I recommend having a business plan before you apply for a loan. Why do we do this? Because it serves as a guide and reminder for you when you're making future decisions for the business and the farm. Also allows the lender at FSA to get a better understanding of how your business is structured and what kind of goals you have for your farm. It's good that we want you to have a general idea of what it is you're trying to do and be able to identify your goals when you meet with FSA to talk about a loan application. How much are you needing to borrow? What kind of projections are you looking at in terms of income? And how much does it cost to run the operation? Those are all things that you want to put some thought into before applying for a loan. We do partner with MU Extension. Our local contact is Manita Ale, and she helps people with business planning services. There's a link here to the MAFIC website. If you register on there, somebody from MU will reach out to you, and you can utilize their business planning services. And that's not just limited to business planning. They help with lots of different technical things. And then I would also say maintaining financial and production records. Keeping records allows you to utilize to identify strengths and weaknesses. The main thing is that you use a system that works best for you. So if you're someone that does not want to input something into a computer or an app, maybe something like a paper-based system on a notebook is better for you. Just something where you're trying to keep records of what's happening on the farm each year. I know some people that will, as they harvest, they weigh the produce and then they just write it down in a notebook. I know other people that use QuickBooks or, some other type of software program. So it's really just what works best for you. We also want you to file a Schedule F on your taxes to show that you have that operating history. So once you get a loan from FSA, or even if you haven't gotten a loan, it's a good idea to go ahead and file a tax return, just showing that you have that on paper. And the records that you keep definitely make the application process smoother when you go to apply for a loan. We have a loan assistance tool available on our website, and this gives you a quiz that you can walk through, and it talks about what you're trying to do, whether you're trying to purchase a farm or equipment, and it walks you through which types of loans might be best for you and the eligibility requirements. So that's something that anybody can use. It's just a good thing to look at maybe before you go and sit down with a loan officer or walk through an application with them. Farm storage facility loans. So we can use these to build structures and purchase handling equipment that's used to store and handle a commodity. So that would be after harvest. We can do equipment for washing, drying, packing, storing, and moving. So it's really a wide variety of what we can finance. We have done some refrigerated trucks. We've also done walk-in coolers, and we can also pay for like the refrigeration system in the cooler. Some eligibility requirements to qualify: you do need to grow the commodity yourself, and you do need to show a need for the storage. So you do have to have an acceptable credit rating and financial analysis and have no delinquent federal non-tax debt. And these are just some pictures of some examples of things that we financed. So this is like an enclosed trailer. Again, we've done a van, refrigerated truck. So there's, if it's something that we haven't financed before, that doesn't necessarily mean it's not eligible. We can definitely, ask. The sky's kind of the limit with the farm storage facility loan. On the term, we can do 3 years up to 12 years, depending on the loan amount. And then the interest rates, similar to the farm loan programs, they are fixed for the life of the loan. So just some expectations with the farm storage facility loans. They're annual installments, and we do periodic site inspections for the term of the loan. You do have to store just the crops that you're using. We don't want you storing somebody else's crops in the facility that we loaned on. You also need insurance for the crops for the term of the loan. And FSA does have a insurance program for specialty crops. It's called the NAP program, and I can definitely provide more information on that if you're interested. Basically, that is meant to be a substitution of not having federal crop insurance available for a lot of the vegetable production and specialty crops. Here's our contact info. This is NRCS. We've got Sarah Shinesky and Elisa Moss. I'm with Farm Service Agency, and so we're housed in the same office on Page Avenue. With MU Extension, we have Manita Ale. And I've got links here, or QR codes, for our newsletter if you'd like to stay up to date on what's going on. And then if you are located outside of the St. Louis area and you're not sure where your local office is, this QR code will take you to the service center locator. So you can find out who your staff are and who you need to contact if you have questions. I think that's it for me. Do we have any questions in the chat?
Yeah, there was a question. Could a USDA farm loan through a local bank be refinanced with FSA?
Okay, the question is yes, depending on what kind of loan it is. So if you have a real estate loan with a bank, we can't refinance that. However, if you have something like an equipment loan or potentially livestock, some kind of operating loan with a bank, we can refinance that with FSA. So the real estate loans are kind of limited to only purchasing ground or improving the ground that you already own.
Awesome. And then we have another question, and I didn't know this term until I Googled it. Can it be a tanker garden, which that's basically, I guess, raised beds made out of stock tanks. So I'm not sure if that question is related to purchasing that stuff or putting them on a piece of land.
Okay. Yeah, we could definitely, if that's just part of the equipment and infrastructure you're trying to set up, as long as you're growing, a product that you intend to market, we definitely could help with that.
Okay. Could a cut flower grower qualify for a walk-in cooler?
Yes, cut flowers is an eligible commodity.
Okay. And then there's a question here. Are trees considered a specialty crop? I guess, would trees be a eligible commodity? I know tree fruit is and nut crops, but I guess what about like nursery stock stuff? Is that
Yes, we can do nursery type trees. I would say if you're looking at like logging timber and selling that as your product, that's generally something that we can't loan on. You kind of have to remember you're getting involved with the government program. And so any kind of tree removal is, it's pretty frowned upon, for our environmental requirements. So I'm not saying that's a total no, but generally we can't just come in and clear cut something like that. But yeah, we definitely can do nursery crops. I know we've done a couple loans for Christmas tree farms, so that's just another example.
okay?
Yeah, fruit trees.